Hello and welcome to the day ahead. It is Thursday, January 29th. I'm Andrew Gagan. Well, the local market is set to open marginally low with ASX futures down around 4 points. A 5-session rally on global equity markets has ended after the US Federal Reserve kept rates on hold as widely expected, citing elevated inflation and solid economic growth while giving scant indication of when interest rates may be cut again. Stocks on Wall Street were little changed when the Fed decision was revealed. Investors were perhaps more focused on earnings results from the mega cap tech, with the S&P 500 posting slight losses after crossing above the 7,000 point level for the first time, ahead of earnings from Microsoft, Tesla and Meta after the closing bell. Well, Microsoft delivered a marginal beat on quarterly revenue expectations for its crucial cloud computing business, highlighting growing competition in the industry. Revenue at its Azure cloud division grew 39% in the quarter. Shares, though, plunged more than 7% in extended trade. Meta forecasts its capital expenditure to increase sharply as the social media giant builds AI infrastructure. The Facebook and Instagram parent expecting annual capex of between $115 and $135 billion. Shares of the company fell about 2% in extended trade. And Tesla beat Wall Street estimates for fourth quarter revenue despite the EV maker delivering fewer than expected vehicles in the holiday quarter, reporting revenue of $24.9 billion for the 3 months to the end of December. It also said it entered into an agreement to invest about $2 billion into Elon Musk's XAI startup. Elsewhere, Seagate Technology shares surged to a record as the hard drive maker recast third quarter revenue and profit above expectations. Among the other movers, Texas Instruments shares jumped after the chip maker forecast first quarter revenue and profit above estimates. And shares of the gold miners, well, they were higher, tracking the rise in bullion prices. Well, persistent inflation, stabilisation of the jobs market and solid economic growth had prompted the Federal Reserve to leave interest rates on hold.
September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%.
The Federal Reserve Policy Setting Committee offered no hint about when another interest rate cut may come, noting that the extent of timing of additional adjustments to the policy rate would depend on incoming data and the economic outlook.
After the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and will continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
There were 2 dissenters of the decision, with Governors Christopher Waller and Stephen Miron, who were appointed by President Trump, arguing for a 1/4 percentage point rate cut. Well, US Treasury yields extended earlier gains after the Fed left rates on hold. The 10-year gained more than 4 basis points to 4.26%. The 2-year was up at 3.59%. US dollar held gains against the euro and yen following the Fed decision. The Aussie dollar slightly higher at 70.4 US cents, having been boosted yesterday on higher than expected inflation and the prospect that interest rates will be lifted at next week's RBA meeting. Well, oil prices have risen to their highest levels since September as President Trump warns that a US Navy carrier strike group is poised to carry out attacks on Iran if it fails to strike a deal with the US. Brent crude futures up at $68 a barrel. Gold has climbed above $5,300 an ounce for the first time as investors continue to pile into the precious metals amid economic and geopolitical uncertainty. Spot gold up on 2%, while spot silver was also up around $114 an ounce after hitting a record earlier in the week. Copper was up 1%, iron ore up marginally to $104 a ton. And Bitcoin is currently trading at around $89,000. It's quiet on the data front today. Among the companies reporting results are Whitehaven Coal, Aluka Resources, Liontown and Mineral Resources, and Main Pharma is holding its AGM. That is your day ahead. See you again tomorrow.